This podcast is brought to you by Customplan Financial Advisors, Inc., an independent insurance managing general agency in Canada. Financialpodcast.ca was developed with one goal in mind: to educate Canadians on important topics that affect their financial well-being and make it readily available to all. We welcome you to plug in and learn with us. If you have questions, please email us at contact@financialpodcast.ca.
Good day, everyone, and welcome to Financial Podcast. I'm your host, Darlene, and today's guest is probably known to you if you've ever needed expertise in the group insurance sector. Dave Patriarche is here today because he's written a great book called Selling Benefits, where you'll not only learn some great reasons to specialize, some facts on group insurance, and maybe even a little boating information as well. Welcome to the program, Dave, and thank you for taking time out of your day to chat with us.
Thank you very much for having me. It's great to be here.
Oh, we're so happy you could make it. But let's start off with, how about you tell us, who is Dave Patriarche?
Oh, depends on who you're asking. It changes different times. So from a business perspective, I'm a group insurance specialist that does nothing but employee benefits. And I've been doing that for 25 years, just past my anniversary, and really focusing on small and mid-sized clients and trying to provide them with fairly priced benefits, and also to reduce liability and make sure to take away risk from them wherever possible. And along the way, I've evolved, and we started Canadian Group Insurance Brokers about 18 years ago, which is an association geared towards education around benefits, and we have members coast to coast. I also do expert witness work in court cases around benefits, wrote the book, and get involved in pharmaceutical company ad boards, advisory boards, and things. So I'm passionate about the industry, and I kind of get involved in all little bits and pieces of it all over the place.
Well, yeah. You certainly have a lot of knowledge, that's for sure.
It piles up. And then there's the personal side, and I'm a sailor, and I love to travel, and our family travels all over the place. So there's like multiple sides of me and stuff along the way. So never boring.
No, and that's what made your book kind of interesting for me, as well as all those little side notes. So
well, and I try and work that in. I mean, I've been a speaker around benefits for, 15 years or so, and benefits gets a little bit dry sometimes. I mean, insurance is not the most exciting topic, and quite often what we're talking about is very technical in nature. So I try and get sailing vacation pictures and just land vacation pictures and everything into the presentations, and it just gives you, you can tie it into the story and gives you a bit of a break. And it's amazing watching people in the audience that are kind of like almost falling asleep, and all of a sudden they pop open and they're like, oh, I sailed in Croatia, and you all of a sudden you've connected with them again. So it does show up all over the place. Yeah,
I can believe that.
Yeah.
And you talked about how long you've been in the industry, for 25 years, but early on, when you decided on your niche, you came up with a checklist for selling or talking about group benefits. What are some of the highlights of that list?
Yeah, so that started probably about a year or two in, and it was all the things I wanted to talk to clients about in a renewal meeting or an introductory meeting, but you would sometimes forget. And I mean, I don't care how good you are, you always walk away from a meeting going, oh, we should have mentioned this, we should have discussed that. So I decided to make a checklist of all the things that would help to keep them out of trouble, that would make sure I spoke about those issues, and then they would have the lasting reminder of the list to give them that information as well. So it was a whole lot of different items. It's 2 pages long. It's always been 2 pages long. We add and adapt and change, and covers things like taxation, liability, some HR issues, policy issues, and is basically there to help bring the education of the client up a level.
Yeah, well, it looked pretty well thought out, the one that you had in the book. So
yeah, and it's been fed by a lot of people. So Elizabeth Forrester from Blaney McMurtry, who's now retired but was a lawyer, a partner with that firm, a great employment lawyer. She helped me at the very beginning when I first drafted it up and reviewed it, and it was just kind of great to get that feedback. Yeah. And then along the way, different accountants and lawyers have added thoughts and comments along the way. So it's definitely a work in progress too.
Yeah, well, and you know what, it's a good idea too, because some of these issues can be so complex that you want to make sure that you do keep on track and you mention as much as you have to.
Exactly.
All right. So I've worked for large employers that had outstanding benefits, and I've worked for large employers that had a standard group benefits package. And I've also worked for small employers that had no benefits. What would you say to a prospect about the advantages of having a group benefits plan for their employees?
And there is no one answer. So you really have to listen to your prospect or prospective client to figure out what's mattering to them. So one of the first questions we ask is like, why are you doing this? What made this happen today? What made you reach out and say, I want to start a benefit plan? And that will kind of drive how you kind of explain the pros and cons of benefits. Probably one of the biggest things, it's one of the last great methods to transfer funds to employees tax-free. So if you have, company cars, it's a taxable benefit. If you have gym memberships, it's a taxable benefit. But employee benefits are non-taxable except for Quebec. But so it's one of the last ways to do that transfer. So instead of just being an insurance product, it's a compensation product as well. More than that, though, I guess we have a lot of employers that are trying to attract and retain employees. It's table stakes. People are asking when they get hired. And so it may be just, this is the offering that we want to do. And then there's some great employers that are very paternalistic, like the ones that you've worked with in the past. And they really believe in, it's not a cost of doing business. It's, one of the benefits you want to offer your employees to keep them engaged and be more paternalistic.
Well, and there's definitely some appeal to that as well. It was always a bit of a relief when you knew what your benefits were as an employee, and it did make those employers a lot more attractive and easier to work for.
Yeah, and interestingly, most people don't figure out what their benefits are until they need them. So a lot of the time, in the hiring process, you kind of go, okay, I'm okay with the salary. How much vacation do I get? Do you have a benefit plan? Okay, we're good to go. But people don't really dive into, is there cost sharing? What's the co-insurance levels? Is there disability coverage or not? Things like that. So it's usually kind of treated like table stakes in the hiring moment, but then afterwards, people start to look at it more when they need it. That's for sure.
Yeah, and I'm married to an insurance guy as well, so I guess that's maybe why we always said it too.
There you go.
So you've talked about, and I think you mentioned this in your introduction to a little bit about talking about protecting your clients from liability in the plan administration liability coverage.
Yep.
What is this, and what kind of plan administrative errors can occur?
Yeah, it's kind of the ultimate get out of jail card. And what it is, so let me back up maybe. So when people always kind of say, well, what's this liability that exists with employee benefit plans? And it's really not the employee benefit plan that creates a liability, it's the employee that does. So the moment you are an employer and you hire your first employee, there's obligations on you, whether it's workplace safety, violence, harassment, sexual harassment. There's like a million different things that you have to kind of keep in mind. And administering your benefit plans is just one of those. So sometimes people, when they hear me speak, they go, oh, well, I don't want to put in a plan because I don't want the risk. Well, you already got the risk. All we're doing is providing another benefit with another risk. And so what plan administrator liability coverage does is it's a rider to your commercial general liability policy, your business policy, and it's basically E&O coverage for the plan administrator. So if the plan administrator with the employer forgets to enroll an employee, forgets to update a salary, maybe miscommunicates the benefits in an education event or something like that, it protects them in the event they're sued. So what do those claims look like? Probably the most common areas of liability that are the highest risk and highest cost are disabilities. So if you hired an employee and forgot to put them on the plan, and 6 months down the road, they're disabled for life, then that's your fault for not doing that. You as an employer, you have a duty of care to make sure that they're enrolled in the plan. And if the employee sued, they would quite likely sue the insurance company and the broker, the brokerage, and anybody else that's involved.
Right.
And they would very likely win, or there'd be a settlement at least. And that can be in the millions of dollars. So my goal is, no employer wants to have to write a check for $1 million if simple administrative processes mean that there's no cost. And so where's the millions of dollars come from? Well, if you have an employee that makes $100,000 a year, and they'd replace that if they were disabled at, say, just 2/3, and they're 35 years old, well, then for 30 years, from age 35 till 65, where benefits generally end for LTD, you'd have to be replacing basically $67,000 times 30 years, which is like $2 million. And no court is going to say, hey, you can just keep paying them for the next 20 years, because you don't know if the company's going to be around in a day or two. So they're going to be expected to make a lump sum payment of the future value. That's a huge number. But plan administrator liability coverage will match your CGL policy. It might be $1 million, $2 million, $5 million, or even $10 million of coverage. And the great thing is, it's free. For the most part, it doesn't cost a penny. It's just knowing that it's there and asking your business insurance rep advisor to add it to your policy if it isn't there already.
That's incredible. That's something that can be so simple, like a tick of a box or something like that. I'm not sure if that's what it is.
It is pretty much, yeah.
They just tick that box, and then they're protected against, so then they're protected against those errors.
Yep. And a lot of the stuff, a lot of the things that we do are really simple. If you know about them, it's not a problem. Like, I mean, you don't try and save time by using your hairdryer in the shower. Like, you just know this is going to end badly. And you just kind of go, it's really simple. All you do is make all the plugs more than 6 feet away, or just tell everybody, educate them, don't take this in the shower,
Right.
And that's kind of a silly example, but I mean, as soon as you know what the problems are, they're real easy to fix. It's maybe a change in process or procedure, or just a tick box. So what we do is try and educate clients, and through my role in CGIB, educate advisors to be able to educate their clients and protect themselves.
Wow. And the fact that it doesn't cost anything extra, you'd think that everybody would be ticking that box, but do you find often that employers are not ticking this box?
Well, the problem is, when I walk into employers, prospective clients and things like that, it's one of the first things I ask about. Almost none of them have ever heard of it before, but many of them do have great advisors in their business insurance. So when they're writing their CGL policy, they will ask, do you have a benefit plan, and add it in. One of the companies I work with, CRE Insurance, they just add it in automatically. So when I started Canadian Group Insurance Brokers, there's no employees but me, and it has an employee benefit plan coverage through the plan administrator liability coverage built into it. And his attitude is, it doesn't cost anything. And one day you'll hire an employee, and one day you'll have a benefit plan, so you're already prepared.
Right.
And he does that, I think, for most of his clients that he does business insurance for. So it's not it's not hard to do. It's just identifying the issue, and once it's there, once clients see it, they go, that's great, and then you can kind of forget about it.
Yeah.
It's there, it's in place. We remind them every year about it, only in case they change their insurer on the business side of things, which we don't do.
Right. Wow, that would be a relief for a lot of employers. For the brokers that are listening to this, is just one more piece of information to pass on.
I'll give the advisors another reason to learn about it. Like, if you don't know about the product, call whoever your business insurance person is and ask them, and they can educate you a little bit. But the other thing, when we get into court cases and working as an expert witness, and there's lawsuits, one of the first questions I ask is this insurance there? Did the advisor tell the client how to protect themselves? And if the answer is no, then you have a pretty good idea that they're not a group specialist right away. So before you ever meet the person or see their background, and if they say they've never even heard of this, that's a problem. And when we do seminars, 75% of the audience doesn't know about it. It's pretty scary when majority of advisors selling group insurance don't know about a free product to protect the client. That's just crazy to me. So we've been trying to tell everybody for close to 20 years. Yeah.
Well, it's a good thing to have. And I think you're probably right. There's probably a lot of people unfamiliar with that option within the policies. So,
yeah, for sure.
And it's so simple.
It is.
So changing things a little bit here.
Yep.
We've all encountered situations where our clients or customers have wanted us to do something that's just not in anyone's best interest. You can come across these awkward situations.
Sure.
But when you talk about that in your book, you recommend that the advisor walk away at that point. So can you walk us through a scenario that could potentially happen, and how does it benefit the advisor to walk away?
Yeah, and it's a great question, and it sounds kind of trite when you just say just walk away, but it's there's a bigger reason for it, and I'll give you the most common one and probably my number one unbreakable rule, and that is I will only handle benefits for companies that have mandatory plans. And by mandatory plans, I mean the contract is structured mandatory, meaning everybody that's a full-time permanent employee has to be on the plan. There's no, I don't want to be on the plan. There's no opting out. You can waive health and dental coverage if you have spousal coverage, but you can't just say, I don't want to be on the plan. It's a condition of employment.
Right.
And the way insurance companies prefer to write contracts is non-mandatory with 75% participation required. And so by doing so, if a paperwork problem happens or whatever, all the risk shifts onto the employer. When it's mandatory, it shifts on to the insurer. So one of the first rules we say is we're going to restructure your contract as mandatory. If you have 100 employees that are full-time permanent and eligible, but only 75 on the plan, then you have to put the other 25 on or we don't take the case. And there's a few reasons, not just liability, which this protects against, but also it means there's less rate volatility. Because what happens is when there's optional plans, it's usually there's cost sharing with the employees, and the employees are saying, I don't want the plan because I want to save the money. And I don't think I'm going to, like I'm healthy and I don't spend anything. So the healthy people come off, the unhealthy people stay on, and the rates start to spiral upwards. So we want to kind of avoid that. We also want to avoid things like late applicants. So if somebody forgets to enroll someone with a mandatory plan, they bill back to the effective date. So if you're off on vacation and then went off on leave or say mat leave, and somehow somebody got left out of the enrollment of the plan, and and it's now 9 months later, then the insurance company would bill back to their effective date on a mandatory plan, and the person could put in their claims for that time period as well. On a non-mandatory plan, they would treat them as late applicant, medically underwrite them, and have the right to refuse them coverage. And that creates the problem. And that can be total exclusion. It can be no life, no disability, no health, no dental. And that's totally within the insurance company's rules. So I insist on mandatory. And if the employer says, no, I'm not okay with that, we go our separate ways. And we find that out very quickly. It's in the very first conversation, in the very first 15, 20 minutes of calls generally, because that ties into so many other things. And the other part of mandatory is that when you do it, you've got the stability of pricing, you've got the reduced liability and everything. Everybody's getting the right benefits. So you're not going to have to say to an employee, I'm sorry you're disabled, but you made a choice 5 years ago. So there's kind of no hard feelings. So it's easier to be more paternalistic and everything. And if the client says yes, then we work together. If the client says no, I want it to be non-mandatory, I want to pick and choose who gets to go on the plan, there's a problem. That's called anti-selection. And what I say is this: if you had 100 employees and your contract says you have to have 75% participation, as non-mandatory does, and you now have 75 people that are on and 25 have opted out, what do you do with the next hire? When the next hire comes in, if you allow them to opt off the plan, you're not in compliance with your contract anymore. There's less than 75% participation. So would you force the person on to maintain the contract's viability? And every time they will say yes. I go, well, then if you're going to force that one on, let's force the other 25 on. It's that simple. Because otherwise you're going to be in violation of the contract or something along the way. And that argument works most of the time. Like once people actually start to wrap their head around it, and my end result of saying, if you'd like me to fully protect you and you don't want to make it mandatory, then I have a great second alternative: drop your plan altogether. Just don't put one in. If you have one, remove it. Now there's no risk. It's the poor administration of a plan that's a risk, not having one or not having one. It's just when you're not kind of doing it all right.
Yeah. And you make a good point there with if you're going to force one, then force the other 25 as well, because it really does amount to the same thing. Like I've never worked for an employer where it wasn't mandatory or strongly encouraged anyway. I
Yeah.
don't remember ever opting out of benefits, honestly.
And it could just be, I mean, if you're married to somebody, living with somebody who's in the insurance business, then you kind of see things differently than the average person too, right? So
well, that might have been a factor.
it prioritizes things a little bit differently too. No different than if you know people who've been disabled or on high cost drugs or any number of things, you become attuned to things a little bit differently. And I would say since the 80s, when we had kind of the HIV crisis and the cost of drugs kind of really started to jump up a little bit more,
Yeah.
I think that kind of opened people's eyes a little bit to the importance of insurance and the value of group insurance, because it wasn't a $2,000 drug we're talking about. We're talking about 20, 30, 40, 50, and now hundreds of thousands of dollars every year for the rest of your life.
Yeah.
And people can't wrap their head around that very well unless they've got experience.
Right. And I think we've all seen the rising cost of drugs, and you talk about that as well in your book, some of the issues around drug costs.
Yeah.
But like for me, it wasn't prescription drugs so much as vision care. We were talking about glasses earlier before getting on, and you don't realize how much you appreciate all these additional healthcare benefits until you need them.
And those things are not even insurance. They're just kind of budgeting. They just help you financially. Same with dental, vision, parameds like chiropractors, massage, and physio. You don't know anyone who lost their home because of a vision benefit or lost their home because of a dental claim or anything like that. It's usually drugs, life, and disability that are the big kickers.
Yeah. Well, that's kind of an interesting conversation bit that we could probably have a whole segment about on its own.
You can. I do whole seminars and I do kind of half-day workshops on plan administration, liability, risk reduction, and all that kind of stuff. And it's 4 or 5 hours, and we always end up racing to the end. And everyone says you got to make this a whole day event, except sitting through 8 hours of it is a lot, even if it's valuable.
It is.
Yeah.
Another thing I found interesting in your book is that you discourage rate shopping, and I love your reasons why. You see it, or I see it, as a win-win-win for the client, the insurer, and the advisor. Can you tell us though, like, why would you want to avoid rate shopping? And you kind of touched on it earlier with the fluctuations when you go from a mandatory to non-mandatory. So.
Yeah, my goal is to have fair pricing for clients, and this is even on my website. I will guarantee you in writing that I will not be the cheapest. And the problem in our industry is there's always insurers or TPAs, third-party administrators, that are buying business. So they will price something so low that it's hard to say no to it, but it's totally underfunding the number of claims that you have or the value of those claims. So what happens is when you get to renewal time, you get this huge sticker shock. So you might get 25 or 30% savings today, and then you get a 45% rate increase a year or 15 or 16 months down the road.
Yeah.
And once you kind of get burned a few times, people kind of go, okay, I'm tired of this.
Yeah.
So try and get to the right price. And if you do that, then over time, your pricing stays fairly reasonable. And I track numbers and share them publicly for like the last 15 years or so. And our average increase, including aging, for all benefits for all clients, is about just under 4%. And so that's higher than inflation, but remember, aging is a big part of it. So everyone getting a year older means your life insurance rates are a little bit higher, your disability rates are higher, your health rates are a little bit higher, your dental is a little bit lower, but in general, they're all kind of driving things up. So when you take aging out, then we're down to about 1.7, 1.8%, which is almost kind of inflation. Right. So costs aren't out of control. They're just very volatile, which is tough for small business and stuff. So so when you go to shop, and I just did a renewal with a client this week, and they're seeing a rate decrease this year. Their rates are going down about 10%, and that's partly because of COVID. Their claims have dropped and everything, and they want to go to market to see if they can't save another 20 or 30%. Well, that's great from just like trying to save a few bucks. The problem is the claims that weren't paid during COVID are coming back now. So the people that didn't go to the dentist and weren't going to massage and physio, they're back in full force now.
Yeah.
And now, a year later, dental fee guide in Ontario is 4.6% higher. So right away, the costs are about 6% higher than the same work being done last year. So there's all these kind of drivers that are, outside of our control. So it's, you kind of go, yes, it looks like a great rate, but it's not sustainable. And what happens is, I mean, the client has obviously the sticker shock. If the employees are sharing in the cost, then every time there's a change, they're seeing these ups and downs on their payroll deductions. Yeah.
Yeah.
And the other big problem about, shopping and changing companies often is there's no two plans the same anymore. So it used to be if you had an open formulary, 80% drug plan, everybody paid pretty much the same. And then prior authorization and reduced formularies and everything started to come into the market. So you can switch from one company to the other. The plans look similar, but they pay for different things. One might be standardly paid, one might be a prior authorization drug, so you have to get doctors to fill out forms and stuff. And another might just decline it outright. So there's kind of not a lot of wins to constantly shopping. So
Yeah.
my clients may pay a little tiny bit more than somebody who's shopping every year, but they're getting kind of a more smooth, non-volatile renewal rate. So it becomes more easy to budget and, becomes a little bit less maintenance. And the cost and time to change is huge on employees, plan administrators, everything too. So they all.
Well, and I was just thinking about the whole budgeting part of it too, because if you're sitting in the accounting department trying to come up with a budget for the company for the next year, and all of a sudden, you're being told that the plan is going to change, that it's being put to market, that you're rate shopping. I mean, how do you even, it would be tough for somebody to come up with an appropriate budget for a large company to manage, and budgets are so important in the financial schemes of these large companies. So
Yeah, as you get bigger, it gets easier. So it's really small companies have a bigger issue than large, and the reason is large employers have the law of large numbers working in their favor. So they end up with all these larger number of employees to spread risk amongst, and it covers the volatility off a little bit better than small cases.
right.
Small cases, if you have 10 employees and one person's on a claim that's $25,000 a year, that just throw your numbers through the roof. So it's not uncommon to see 25, 30, 40% rate increases at renewal time. So large companies generally tend not to see that. It self-mitigates a little bit.
Well,
Yeah.
that's going to be comforting for them to know about one more reason for their small to mid-sized companies to reconsider the rate shopping idea.
Yeah, and I think, if you get back to some business basics, most of our clients don't want to be rate shopped either. Most of the business I work with, whether they're manufacturers or service providers or whatever, they're not trying to be the cheapest of the cheap. They're trying to provide good value, good product, good services, or whatever at a fair price. And I mean, when you run across a prospect and they say, I expect you to change companies every year and find me the cheapest one, to me, that's a sign to run away.
Yeah.
And how would you feel if your clients, dear prospect, are kind of doing that same thing, going, we're going to come to you one year, we're going to go somewhere else next year. And benefits are a little bit protected because we're kind of in a Canadian marketplace with licensing and controls, but in a lot of other businesses, it's global now. It doesn't matter whether the neighbor down the street is competitive, you're competing with the world.
Yeah.
So you kind of got to have a good value add and a fair price and everything else. And I think we all appreciate the clients that stick with us, even if this week we're not the cheapest thing out there. But hey, we don't all eat at McDonald's and we don't all shop at big box stores for everything. So we all like our local restaurants that are not the cheapest, but they are great value, great food, and great people.
That's right. That's exactly right. Now, you talked before about your association, but you are passionate about educating clients, and some might feel that this is a good way to lose a client. But you offer up some pretty good reasons why that might not be the case. Can you go over what some of those reasons might be?
Yeah. So I believe above all else, two smart people is way better than one. Two sets of eyes on anything is better than one. So if I can bring clients to an education level that's high, I mean, there's a selfish side, and that is if they know how to do everything, they don't need me so much, which to
Right.
me is a good thing. They'll reach out to me for the stuff that's complicated and weird and
Yeah.
strange and different. But then, they're just as likely to catch a mistake made by an insurance company or by them or by me. And so having two sets of eyes on the whole thing makes it a whole lot better.
Yep.
And at the end of the day, if the client understands the system, the process, the contracts, the administration of them, then it's less of a risk to losing the client. When an uneducated advisor maybe comes in the room to them and says, hey, I want to save you 25% on your benefit plan, they know what rate shopping looks like. They know what the effect is. They know that it's unsustainable because they have all the numbers. They understand how to interpret all that information. So we kind of keep them out of trouble by educating them. Does it mean you lose clients? I very seldom lose clients because of education. I mean, you lose it because of mergers, amalgamations. One of my biggest clients became unionized years ago. And so all of a sudden everybody goes on the union plan and that's that. But it's generally not because they're better off. But I tell you where it does win. The education being a higher level means when those HR people or administrators or office managers go on to other companies, they bring you along. So you have great educated people. They appreciate who you are, what you offer, the value you bring to the table. So when they end up at a new employer and there's a generalist that doesn't really know group benefits, can't answer any of the questions, it becomes really quick, before they come back again. So
yeah, those are excellent points.
So in the end, it works for me. Yeah,
it certainly does.
You win more than you lose. That's for sure.
Well, and you know what? I've always been a strong believer too. And, when I know something or when I've learned something, to share it. And I know lots of people that are the same way. It's nobody wants to, or a lot of people don't want to hoard the information for themselves. So there is that aspect of sharing knowledge and information.
Well, it's funny, our industry isn't famous for it. Like, I mean, it's really, everybody thinks that they created the next great thing, and there's nothing new in this business. Like, I mean, we've created products and processes and services and procedures and letters and documents and all sorts of stuff. And I'll say, look, I made this, and somebody will go, hey, here's one I found from 24 years ago that looks just like yours. And of course, I mean, we're all trying to solve the same problem. It's not that I saw that one and stole it. It's just we're all trying to solve the same problem. So there's very little that's new. And I think a lot of people have this, a lot of advisors have this mindset that if you've got great information, hold on to it and don't share it with anybody, and try and look like you're the superstar. So don't educate your client, make them dependent on you. And my problem is, I can't see the long-term viability of that. If they're fully dependent on you, then when somebody else comes in and says, hey, I'm going to make you self-dependent, you won't need to call an advisor every time you want to do something, because you're going to know how to do it yourself. It doesn't mean you can't call me. It doesn't mean if you're busy, you can't push it off to me, but I want you to be independent. And most employers want to be there. They want to feel like they're in control of their domain,
Right.
Yeah.
However, sharing is always better, in my opinion.
Sharing is always better. I agree. Yeah.
So let's talk a little bit about storytelling. And for me, I love listening to other people's stories. How does storytelling help an advisor?
Yeah, I think the biggest thing, and not just advisors, but any business, I think storytelling shares relatable and related experience. So if you can tell somebody how to protect themselves, but when you tell the story about somebody who's been damaged by not doing something right, simple example, I'm a sailor, sailboat in the background here. If you said wearing a life jacket is mandatory, that's the law. I want to make sure everybody on the boat wears a life jacket. That's one thing.
Right.
But if you actually say, look, I want everybody to wear life jackets, because the moment you go off, you may be a great swimmer, but the moment you go overboard may be the moment that you hit your head along the way. And here's what's happened. Let me share a story of a friend who had this happen. They lost somebody on their boat, or they had somebody seriously injured. We want to kind of avoid that whole problem. So sharing the story of the loss helps people relate to the thing a little bit better. And it makes it more interesting as well.
Mhm.
And at the same time, you're kind of reinforcing that you're a subject matter expert. Like if you've got a story about, life insurance and disability insurance, critical illness, high cost drugs and everything, then you become just that much more of I don't know, I guess just an expert on it. So it's more believable, more understandable, and above all, more relatable as
Yeah.
well to the people. So storytelling is just getting us to the same place and then kind of educating them a step further and making it an entertaining thing as well. And I always kind of joke that I don't know if sailors are the biggest storytellers or not,
I don't
but
know.
I think it does. You got a lot of time on boats to talk, so we all share
Well,
stories, and they get embellished sometimes. The
a
the
little.
one armed man that caught the fish that was this big, like that kind of
That big,
story.
yeah.
Yeah.
I've heard
But
those stories.
yeah, exactly. So it's a boater thing, it's a cottage thing, it's a lifestyle thing maybe. But I think storytelling is the one thing that really separates us, and it really, if you're a great advisor or a great whatever you do, if you don't use storytelling to engage clients and educate clients, then you're kind of really missing an opportunity.
Yeah, I agree. And there is an art to storytelling, because some stories people can be, labor to get to the point of them, and
Yeah.
and you sort of lose track.
Yeah.
But
I can be guilty of that too.
yeah, well, I think we all have.
Yeah.
So there's an art to that as well, but you get the point across. So
Yeah.
that's
Well, and that's part of my book and stuff too, is
Yep.
just kind of doing the storytelling. I mean, you're sharing experience to make them relatable to other people, to help other people raise their education. And it's fun too, obviously.
Well, it is. And for me, I enjoyed it because of all those other little stories that you added in there. It made it relatable to me, even though I'm not a sailor, but
You might come one day, you never know.
I live in a landlocked province, so
Yeah, you never know. Yeah.
All right, so we're running out of time right now, but Dave will be back next week for part 2 of this conversation. And thank you, Dave, for joining us and for extending this conversation.
Thank you for having me. It's been great, and I look forward to part 2 of this. So don't miss out. Tune in next week.
Absolutely. But for right now, can you let our followers know how they can get in touch with you?
Yep. So mainstayinsurance.ca is my website. The association is cgib.ca, Canadian Group Insurance Brokers.ca. You can reach out to me by phone if you want, 905-886-9203, for anything you want to talk about. And if you're looking for copies of the book and things like that, they're on the website sellingbenefits.ca. So those are kind of the 3 easiest ways to get a hold of me or find out more.
Mm-hmm.
And or reach out to Darlene and she'll connect us.
Excellent. And it is a great book to get. But I also wanted to thank Customplan Financial Advisors for sponsoring this program. They are an award-winning managing general agency providing fantastic resources to the independent financial advisor. Look at what they offer at customplanfinancial.com. This podcast is now on YouTube and Spotify, as well as financialpodcast.ca. Sign up or subscribe to be notified of every new podcast. And if you have an idea for a podcast or know of someone that would make a great guest, please send an email to contact@financialpodcast.ca. We'd love to have your feedback. Thank you again, Dave, and have a fabulous day, everyone.
The views expressed here are those of the participants and not those of Customplan Financial Advisors, Inc., its affiliates, or subsidiaries. This is not intended to serve as a complete analysis of every material fact regarding any company, industry, or security. This presentation may contain forward-looking statements. Investors are cautioned not to place undue reliance on such statements, as actual results could vary. This site and podcasts are for general information purposes only and does not constitute investment advice and is not intended as an endorsement of any specific investment product or service. Individual investors should consult with an investment professional about their personal situation, Past performance is not indicative of future results. If you are unsure about what is the best course of action for you in your financial planning, then we suggest you consult a fee-based independent financial advisor or get in touch with us to discuss your individual situation. Our phone number is 604-687-7773.